Before we get started, I want to remind everyone that the information in this presentation is not to be or construed as investment advice. The information presented are subject to change without notice, and while we have made every reasonable effort to ensure that the content is reliable and accurate, we have not independently verified the content and are not responsible for errors therein. Please consult a professional advisor before putting a loonie in any of these financial markets.
Hi everyone, my name is Richard Diaz and welcome back to the IceCap Canadian Market Wrap. I hope everyone had a very Merry Christmas and a happy holiday. As you can see, I'm filming from a different location this week, but we love what we do here at IceCap Asset Management and the show must go on. Year-end predictions can be a silly business. People often get married to their views and you can't have much ego when managing money. When the data changes, you must adjust. But it's that time of the year, and of course, there are some things we are looking out for in 2025 that will guide our portfolio construction. So let's get into it. Here are 5 macro themes that we think will have a big impact on Canada, the markets, and the world. The first one is the big moose in the room, and we can't, in good faith, have a chat about what might happen in Canada and to Canada in 2025 without a brief discussion of one of the most anticipated election in years. We won't dwell on the politics in this episode. We'll have plenty of time to dissect the economic platforms of the different parties as and when the election kicks off. But I will set it up for you in case you don't know already. In the red corner, we have Justin Trudeau and the Liberal Party of Canada, the incumbent who has been in power for 9 long years and is a 3-time champ and thus should not be underestimated. In the blue corner, the upstart Pierre Poilievre and the Conservative Party, which to date remain the presumptive favorites. And all of the polls, if they are to believe, suggest that they will totally wipe out the Liberals and come to a majority. We'll see. Without a resignation from the PM or the say-so from coalition partners, the NDP, or some of the rebellious Liberal caucus, it seems like he'll cling on to power till the bitter end, and we'll have to wait until October. In the meantime, a warning. Canadian leadership and the PM job is a poisoned chalice. There is a looming recession, a productivity emergency, a ballooning budget deficit, housing affordability issues, rising unemployment, collapsing private sector investment, and the immigration fiasco, just to name a few of the challenges Canada faces. Regardless of the mandate for the next PM, these problems will not be easily fixed, so my suggestion to you and to others is to manage your expectations. But with any hope, we might stop digging down and start digging up out of the hole we find ourselves in. The next theme is China. In episode 6, we discussed why China is in so much trouble and why, for us, it will continue to be a focus for global growth and a risk to capital markets. Not much has changed since early October. China, the world's second largest economy, is still reeling from the fallout from its decade-long real estate boom and now bust. China's property prices continue to weigh on consumers' psyche, and floor sales, a proxy for the real estate activity, continue to fall. China is in a balance sheet recession. Bad debts and economic weakness is resulting from the real estate bust and putting pressure on capital flows and the yuan. To arrest this decline in house prices and consumer confidence and consumption, Chinese authorities have recommitted to more fiscal and monetary policy stimulus. We expect that for China, 2025 will be the year of the bazooka. Authorities are dead set on fighting this deflationary impulse and are clearly worried about the potential political fallout. And so, they're spending trillions. This may or may not cure what ails China, but in the interim, it will have knock-on effects on commodity prices, currencies, and the fixed income market at home and abroad. The third one is the Trump doctrine, but it's not what you think. There has been a lot of talk about the potential tariff war Canada and other key U.S. trading partners face. We think this is a red herring and totally misses the trick. The big risk for Europe and others is not tariffs. It's that Trump leans into pro-growth policies, deregulates, and crucially, cuts corporate and other taxes. Again, this will make the U.S. an even better destination for global capital than it already is and put even more pressure on Europe, which is committed to manage decline and sacrificing its industrial base on the altar of climate change. The same can be said for Canada. However, as the US is still Canada's biggest trading partner and they are still in desperate need of our energy products, Canada stands to gain if we realign our priorities with America's. The next theme had a more colorful title, something along the lines of "Central banks are screwed," but I vetoed that. The real issue is that unless inflation plays ball and stays neatly on target, central banks are in trouble. At the moment, there is a race to zero. Central banks are aggressively easing and providing the market with liquidity. But unfortunately, the best laid plans of mice and men often go awry. If inflation rebounds on the back of Chinese and American stimulus, base effects, and higher energy prices, central banks will have to cancel their desperate race to zero. Alternatively, if there is a global recession and deflation takes hold, it's not clear that cuts alone will do the trick, as record sovereign debt levels curb the potential for future stimulus. The last, and easily the scariest theme for 2025 is the growing risk of global conflict. There are currently two clear proxy wars at play, and China has made no secret of its intention towards Taiwan. This does not mean that we think it will happen, just that the probability of this outcome has risen over the last few years, and we think it will continue to do so in 2025. We are not political strategists by any means, but as investment managers, we can allocate capital to, in part, mitigate the risks associated with a further escalation of hostilities. Watch this space. All right, so that's a wrap on this week's episode. Thanks again for listening. Happy New Year, everybody. Please like, subscribe, and follow for more. It helps me with the algos. And as always, we manage money for families all across Canada and the world, so feel free to get in touch.